And so there are certain offerings that are only for what we call accredited investors. And if you don't meet the strict definition of what an accredited investor is, the typical way that we define that is somebody whose net worth is north of $1 million, backing out the value of their primary residence, or somebody who in the last 2 taxable years, with the reasonable expectation of this year, have $200,000 in income or $300,000 with their spouse. If you don't fall into those buckets, then an offering that's only for accredited investors is not suitable for you to invest into. Most suitability components from sponsors, operators, syndicators is done through a questionnaire. So in your PPM, you're going to see a questionnaire that asks for you, the retail investor, some very confidential information that they're going to be asking you about your finances, your net worth, your risk tolerance, all of those things. If you don't see that in your offering, that's a warning sign, because the sponsor, operator, syndicator does not care about suitability, but yet the SEC does. So there always has to be a component of suitability involved in that process. And then last but not least, the biggest ingredient that you should expect to see is, what's the document after we've closed this thing? We've got the keys. I'm expecting my distributions and what that's going to look like. Well, that PPM, most of it is going to go into a filing cabinet somewhere, and you're never going to see it again because it no longer applies. But there is a governing document that applies to you, and it's either your limited partnership agreement or your operating agreement, depending on whether you're investing.
So it's the governing doc of the business. So it's all disclosed there. Here it is. Here's how we going to accept money. Here's how we distribute. Here's how we do our taxes. Here's how we manage liquidation or liquidity requests, et cetera. Oh, it's all there, right?
100%. Redemption, whether there are going to be redemption requests, whether you're going to be able to force the buyout of your interest, what happens in the event of divorce or death, or I want to transfer my interest from my LLC to my trust, or from my trust to my kids, or things like that. When is the distributions going to be had? Is there going to be a capital call? All of those things are going to be listed in that governing document.
All right. So now we know why it's so big, but so I'm just Joe investor, decided I want to get out of the public markets, and I like the private, I like the tax benefits, I like the lack of volatility, I like the returns. I want to get in this, and I get this giant document. What are the things I need to be careful about? How do I want to read this? What are some red flags? And why don't you just walk us through from the beginning?
Yeah. So if I get it, so like if I'm a retail investor and I get this giant stack, I usually will go to the summary page, because it'll have broken out typically by page number, the certain sections of the offering document. And so if you're interested in, obviously you should always read everything, but I get it. They're so thick. So don't discount the fact that maybe you need to go ask your CPA or your own lawyer to assist you in reviewing these documents, because they are so dense and so thick. But assuming that you're a seasoned investor that has been on, this is mostly the rinse and repeat game. So most investors who invest with operators and they've received decent returns and they like the experience, they're going to do it again and again and again and again. And that's a great thing. That's a great thing for them being able to grow their portfolio. It's a great thing for tax benefits on an annualized basis. And they need to reinvest the gains that they have essentially earned from each offering back into another opportunity. I'm going to be looking at basically that table of contents, and then I'm going to be essentially making notes theoretically to ask questions, right? So a lot of times people, if you're a retail investor and you read something and you don't understand it, you stop right there and then you just say, well, this isn't for me. And I want to encourage you to not do that. I want to encourage you that if you're a retail investor and you're reading through the offering documents and you don't understand something, welcome to the club. I've been doing this for 23 years. There's certain offerings that I read, right? I do this for a living. There's certain times when I read it for a client to evaluate it. And I'm like, what? What did they just say there? And I have to read it 3 or 4 times, but I usually will make a note of that. And that just means that the operator, sponsor, syndicator, we're going to call them or email them and ask them our questions. We're not going to immediately discount the opportunity that exists because we don't necessarily understand something. So you want to make you want to question, you want to write down questions.